What's going on, traders? How we doing? Let's get right to the market. Let's take a look at what's happening right now. It looks like, of course, at 2 p.m. we got the Fed minutes, and what do you see? Nothing out of the ordinary, at least. Everyone agreeing? What? There's no way that everybody could be agreeing. Now, of course, one of the things that you see consistently and that has changed in the Fed's conversation and what they've said in the past, right? They've always said that they were trying to get inflation to the objective, right? 2%. But one of the things that recently changed, and this happened a couple of months ago, it could be as long as 6 months ago, they started using the word sustainably. And I think that this is really where they're trying to kind of point to, right? Is that at the end of the day, the Fed will not move off of the interest rates until they not only see inflation heading in the right direction, but actually staying in that right direction. And maybe even getting to 2% and staying at 2%. They're not just saying that it needs to hit 2%. They're saying that it needs to stay there. And that's the harder part. That's where they could definitely keep these higher interest rates for longer. That's where everyone in the market is looking to see maybe potentially the consumer slow down, recession come in, and the Fed come to save the day. What is probably going to happen, let's just be honest, it's probably neither of those, right? It's not the consumer really causing the recession, and it's not the Fed coming to save the day. I think what this is just going to be more along a wait and see period. And what will the Fed do? They'll save ammo for the next president that, of course, will be coming in. And maybe it'll be a new president. Maybe it'd be the same. But just the next presidential cycle, they need ammo. That's what they're trying to have. This is why they're trying to be restrictive enough to get inflation back down. And really, what restrictive means is that we have ammo, is that we can move from this side of the ship all the way over to the other side. And this is exactly what I've talked about the Fed has a tendency of doing. If you take a look at the history, what do? They move to extremes. They don't go to the middle, which is probably what I think should have happened here, right? It's not necessarily, did we need them to hike rates this far high? Probably not. But they love to play the extreme. And so what will the Fed continue doing is playing the extreme. Yes, could they maybe raise one more time? Yeah. But I think that's not what we're talking about anymore. And those people that are talking about seeing the rates go way higher, they're just fluffing out there, right? Jamie Dimon, those kind of people that are thinking that, we're going towards higher rates. I don't think that's what's going to happen here, because the truth is we get to the point where we would just literally put everything on a break and nothing would be able to go through in the credit world, right? And I think that now we're starting to get to this point where it's just going to be just a wait and see period to see if inflation can go low enough so that they can finally say it's at a sustained pace or at a sustained 2%. Will we ever get there? I don't think so, but a lot of people don't think so. And so that's something to keep in mind. Will the conversation ever change with the Fed? That's what we need to be watching for. And people are just taking bets on the pivot. When will the pivot come? Will it be first quarter, second quarter, third quarter? Will it be into the following year? I know that everybody was betting on it happening just right now in about a month or so, or December. If you go back to January or even in March period, they were thinking that we would pivot now. And have we gotten anywhere close to pivoting? No, nowhere near. They're still talking about raising rates, right? Not talking about pivoting. So this is why I say that we'll have prolonged interest rates going into far into 2024. I think that you might not even see them go down in 24. It might take till 25 to actually start seeing those rates start to come down. We'll see what happens there. And what will that do for the market? Let's talk a little bit about that. Let's get to the market. Let's take a look at the action right now. The SPY trying to make its way back there to the 440 spot. We've talked about that as a 50% retracement of what? So we did a 50% retracement of this full move. Now we're talking about the half move back. So that would just be a move to 440 and then finally starting to decline. We talked about yesterday how the 50 moving average, the exponential moving average that you see here, the yellow line, it seems to be holding in and holding as resistance. Today, we did get a downward takedown attempt as we saw the SPY come down and start leading the cues to the downside. And then all of a sudden, boom, we're right back up towards these higher highs. And I think that one thing that we need to be watching is where are we closing, right? What are we doing? Well, we're making higher lows and pushing out of this range. I talked about it. If NVIDIA could really hold 450, it could make a run back there towards 490, 500. And it's doing that right now as we speak. Take a look at Microsoft. Microsoft was a stock that led us on the downside and now is what? Leading us on the comeback trail. And I think that this is important to kind of keep your eyes out. But of course, this will top at some point. Now, the only question is, can we continue to maybe lift off of the AI hype? Things like this is what we need to be thinking about. What are you guys thinking about in the chat? Let me know what you're seeing out there. And if you saw any stocks make a big move, we can definitely take a look at them. All right, guys, keep throwing it up there. Hit the like button. And of course, hit that share button. We need some more people here on Start Swing Trade. So how do we do that? You guys hit the share button and let everybody know about the show. And of course, how we go through the sector and industries. Let's take a look at what happened today in those sectors. So overall, utilities leading the upside action. And look at this, guys. This has been a pretty decent move back after a kind of 10% takedown in utilities. And that's how the market goes. It goes, it takes down. Now it's actually pounding back up. That's just how it goes sometimes, team. Consumer cyclical also starting to climb its way back. We'll see what happens on these names. Of course, we were talking about these names yesterday, like Logic, Leisure, and some of those names. Today, I actually shorted Hilton, was able to make a gain. But as you guys can see, this thing came right back. And so we'll see what happens on this one. Was looking to make some more gains on this one. Eventually, it went to 152, which would have been a great gain for me. At one point, I was short pretty big on Hilton. Had about 250 shares here around the 153.40 area. So overall, that would have been a nice like kind of $1.50 gain. Could have been in like a nice $300, $400 winner on Hilton. But look how it ramps back up. This is where we got to be careful. Will we see this start to come back through 156? That would definitely not be what we're seeing in kind of the consumer area slowing down. So this just goes to show us, will we see a flip on that mentality? Will we start to see some of these stocks come back? Some of the consumer companies starting to come back. Of course, Best Buy is one that I always take a look at, especially recently. This is starting to work its way back. And it just goes to show us the consumer might have a little bit of a funk here, but that doesn't mean that they're completely destroyed just yet. So don't count them out just yet. They could still kind of give a little bit of a lift here. Let's go to Amazon and see how they're doing off of their prime days. Of course, we talked about this yesterday, and that could have gave you a nice gain there yesterday. That was a nice little push. It was about 2% yesterday. Today, continuing higher, another 1.6%. So really nice trades there on Amazon. And of course, where could you get that information? On live trading, pre-market prep, and of course, right here, only on Benzinga Start Swing Trade. Of course, we've been talking about the prime and how that could definitely give the lift there for Amazon. So not a bad move there in Amazon. All right, consumer cyclical. We can take a look more in this area. I wanted to see how the cruise lines were doing today. CCL coming right back down. RCL coming right back down, but starting to climb now. So we'll see if they're able to climb here at the end of the market. The SPY continuing to lift off. And this is exactly how a lot of the times the institutionals will stop out retail, guys. This is the type of tricks that they play on us, guys. And how do they play tricks on us? they'll pull things down to deeper time frame hourly supports. So if you go to the hourly support, you look to the left, you're seeing, okay, hourly support around here, 433s, 63s yesterday. Look where the stock comes down to, and boom, you get that reversal pattern right off of that level. What does that do for retail? Well, I'll tell you, a lot of the times the retail traders get crushed on these moves because they're in the ones, the fives, and the 15-minute charts. And then what ends up happening? Boom, they see the downside action. They think very negatively. But the truth is, deeper time frames say what? That the institutional action seems to be on the upside for tech. And that's just easily how we get wrecked, right? We start to see a little bit of a turnaround. Everyone starts reacting to the red side. Next thing you know, boom, boom, it starts coming right back up. And if you look at it, it's just an hourly move towards the support. Boom, boom. And then right back up to resistance. This is as easy as sometimes it is, but this is what I always talk about, why you need to be sticking with that 1 hour chart and making sure that you're not getting caught in those kind of hourly moves to support, and then looking to see what happens at that, right? Because if we would have gone to 432, we break that support and could keep going lower. But you got to be understanding where those hourly levels are, because a lot of times I see the bounce right off of them. All right, we'll see what else is being called out in the chat. Let's take a look there. TPST is wild. Honestly, I wouldn't trade that in a heartbeat. So people that are trading that, honestly, yeah, it might make sense. It might be that, oh, I could have got an insane winner there, 492%. I mean, this does sound all great, but let's just be honest too. This was going up and down and halting within a couple of pennies, sometimes as small as what, 49, 26 cents, and all of a sudden it halted. Let's just be honest, guys. There's really no way of trading this, right, guys? Because the truth is, if you are trading this, how are you managing your risk? There really is no managing of risk there on TPST. So you got to be careful on these names. They might sound really good on paper, but the truth is, this type of trade, I stay the hell away. What's the one quote I always like to use? I don't let one trade make me, and I also don't let one trade break me. This is very important for traders out there to understand that the truth is this type of trade could make you, but it damn very well could break you. It could ruin your account. It could get to the point where you're just like, oh, I'm going to go 1,000 shares deep right here.
I got a bad feeling about this.
And next thing you know, you get wrecked. The truth is, this could very much have been. It's a trap. And setting up there. Now, could this go higher? Yes, it can go higher. It's always about opportunities in trading and understanding where the risk and return really is. In this case, the risk was high and also the reward was high. Could the reward have been higher? Yeah, I mean, you guys can see it. It actually played out this way in a good way. But you know how many of these I've seen where it's gone from $7 back down to $2, back down to $1? That's the one thing that I'd keep in mind. All right, let's get out of that TPST. And I know I can't blame you guys if you guys are taking a look at it. It could definitely keep going, guys, and could keep pushing to the next levels. But the truth is, look at how the RSI is even getting. Super extreme here, guys. And what do you see on the history of TPST? Well, what do you see? You see a bunch of pops and dumps, pumps and dumps. This is this type of stock. And why are they able to do this? Because the volume is so low. Look at the volume on any other day that it trades. It trades 5,000 shares sometimes, guys. Now the volume's picking up. And how much is it picking up? It's trading 150 something million. Well, this is what you call rotation of float that gets the stock moving. But the truth is, this is very high risk, guys. And if you go for these types of plays, you have to understand how to, one, size into these plays, and two, manage the risk, which is the harder part. Let's just be honest, guys, because you are going to get some downside action attempts here that could really quickly stop you out in a name like this, right? So we'll see what happens there. TPST definitely having a great day, but just look how it did here. It did in 2 days, it did 135% move. And what ended up happening? Well, guess what, guys? It was right back down towards the bottom. So this just tells me be careful out there, guys. You can make money on these, but don't forget, you could also lose a killing really quickly. All right, let's keep going, guys. What's going on out there? Sal, how we doing? Although I wished I would have bought some, I feel like I would have gone through 2 packs of cigarettes. Yeah, that's exactly how you would have gone through that. I think it might have been 3 packs of cigarettes. I think I need a cigarette if I trade this. So, and I don't even smoke cigarettes. So that just goes to show you guys, be careful out there, guys. And doesn't mean that you can't trade these, but also understand that if I'm going about this, I'm probably taking what? Taking like 100 shares, something like that. Because if it goes up like this much at 100 shares, yeah, $700 on 100 shares on $200, yeah, that doesn't seem too bad. But if I go into this at 1,000 shares, yeah, it sounds really great to make $7,000 on the upside. But also, what could have happened? What could have easily happened is this could have wiped out to the 120s there, gave me 72 cents on the downside, and I'm down a pretty good amount, right? You can make a killing on the upside, but you also could get destroyed on the downside. Be careful out there, team. All right, let's keep going. Let's go to some other stocks in the market. Of course, cyclical is doing well there. Technology kind of hanging in the middle. Energy still gaining here. Even though it did get hit hard today, XOM news definitely coming in there and weighing in on the industry. Chevron going down pretty fast. And if you take a look at WTI, it's getting hit hard. We're down into the 84 handle. This is where we need to kind of keep an eye out. Do we go back into lower 80s? Or do we go back to the higher 80s? We were just in the 90s, and people are thinking that oil could go back to 100. I'm thinking that we got to at least get back to 90s, but it isn't showing up right now. And so what do we got to do? We got to wait to see that turn. And for me, I'm just going to be patient. I'm not going to go shorting these names because I was thinking about shorting them, like a week ago, like probably like a week and a half ago. But now's not the time to short. Now, not the time maybe to even go long. Now might be the time to just sit on the sidelines. And that's the way I feel. I'm just going to sit on the sidelines here, wait for a little while for things to play out, and then see where oil heads. All right, let's keep going. We'll see what else is going on there. Jared, small size, in and out quick. Yeah, I mean, and you could do that. The only question is, are you going for like kind of a one-to-one trade? That's the hard part there. I definitely don't like one-to-one trades. Wisdom, what's going on? Yo, my folks, Money Mitch, what a day. Played TUP and SQQQ, still only broke even for the week. Laugh out loud. I need my oil to come on. Hey, we'll see what happens. I hope oil gets the lift, but the truth is, let me react versus try to front run. I've been trying my best not to front run so much the moves, but actually be more reactionary to the moves. All right, let's keep going, team. Of course, you guys see basic materials going higher. We saw a lot of these yesterday kind of pushing and continuing right now. Let's take a look at coal. Coal's been hot as of late. Yesterday was a really hot move. Now continuing, you can see BTU trying to get through 26. AMR is your leader. CEIX continues to just push to the next level. METC had recently pulled back, now starting to get the uplift. NC looks interesting. There's a lot of these that could continue to push here. HCC, we'll see what happens if there's a turnaround in coal. If oil's going to continue getting hit and you see it going into the lower 80s, it doesn't make sense for these coal names to continue so hot. So those can actually flip on a dime. All right, let's keep going. We'll take a look at some other action. Is Natty Gas ready to break out? Chip Green, I'm not allowed to look at UNG on this show. I banned it from this show, but you know what? For you, I'll take a look at it. UNG starting to get a little bit of a lift there. And why am I banning this? Because look at this, guys. Every time we think it's going to go higher, no, it doesn't go higher. It's just a hard one, guys. I will see what happens with this. Honestly, what I think is important is let it completely break out. Let it show an amazing amount of strength before I'm going after it. Because what do I get? I jump for the first move and I get wrecked every time in natural gas. I'll tell you one thing. There's a reason why they call Boyle the Widowmaker. And I'll trust me, I don't need any widows right now. We got to be careful there. Boyle is not what I want to be touching because I've seen it do this move plenty of times into the 75s. And then really quickly, it's right back down to 60. What do I need to see? I need to see it go through like 76, UNG, really start pushing through like kind of 9, 10. Show me complete reversal out of the trend, and then we can take a look. Natty Gas is Bud Light's leftovers. Well, pretty much. I mean, you can call it that. Let's keep going, guys. Let's take a look at what else is making moves on the day. Of course, we did have some stocks with some news today. We can take a look at some of that action. Solar stocks have been hot. We talked about BP and Exxon. Let's take a look here at the solar stocks today. FSLR still getting a little bit of a bounce back. You can see on the daily, just not nowhere near as strong of a day like it did yesterday. ENPH trying to get another push here towards the 130. I don't know about these solar names. I don't think they're in the best spot here, right, to continue going. But hey, they are staying strong. And when tech's strong, sometimes you start to see what? Solar pretty strong here. And you can see it leading the technology names. Semiconductors right behind that. Of course, we can take a look to see what types of moves are making moves there. I can just look at the Qs and look at some of the top leaders to see where did kind of these semiconductor names or these tech names kind of really get the lift today. You can see Google up about almost 1%. Adobe up about 0.8. So this actually looking pretty good as Adobe starts to go higher. Adobe is one of the true AI names that I think will continue to come out with actual revenue driving products for AI. And then we take a look here at Meta. Meta continuing the strength, now a new 52-week high on Meta towards 327 and maybe going higher. We'll see what happens there. But Meta, who would have thought that Meta would have came back from when it was down below 100s? It's back to 327, team. Holy moly. That's a 246% win. Well, I didn't think that. But then again, did I think it was coming to 100? Nah, probably not either. So, of course, that all happened with the change of the name, and a lot of people were hitting them because of advertising and things like that. And everyone was wondering, well, how does Meta come back? How do they generate revenue from here moving forward? Facebook is a dying brand. It's already back, guys. So all that talk was just talk out there, guys. I was included in it. That's one thing that we always need to be thinking about in investments. All right, we'll see what else is going on there. Good call, Mitch. You could always play the pullback to the breakout spot. And yeah, there's always ways to try to play it. And that's exactly how I would be looking at it, right? Break out through the major resistance, look for the throwback. When it comes back, then we can try to take the shot. But what I need is something in the macro space to tell me natural gas is the move. All right, let's keep going. Got wood. We'll see what happens on wood. WFG is my wood ticker. And look how it's been going. Not well. I remember I tried to play this breakout to the upside on 90. Glad I got out because you can see it's back down to 68. Ray talked about solar names. I'd stay away from this. This looks to me like it's trying to grind higher, but really it made its attempt to 25. And now it could fail 16 and be right back to 15. We'll see what happens there. AAL was hot to start the day, and look where it's at, guys. Back down to 1248. So not looking good, guys, and just continuing to decline in the airlines. Eventually, I think this story changes, but right now, it's not. It's not the time. Industrials didn't do too bad today. They started to bounce back. We can keep our eyes on some of these names. XLI starting to come back. Let's go to the high cap names here. Caterpillar still kind of coming back there from its dip there towards 260s. I remember when I was calling for this gap to fill. It did fill. You guys can see it right here. Created on when? Well, you guys see it August 18th. So that was when the stock was where? That was when the stock was up here, guys, up at this spot. So that just goes to show us that we could definitely sometimes look for those bigger gaps to eventually fill. And there you guys have it. Nice little gap fill there. Now it starts to work its way back. Let's see if Deere can get back over 400. That's the level that I would be watching on Deere to see if we're going to get this kind of move. And of course, heavy farm and heavy construction here. If it can get back above 400, it'll look pretty decent. If it can't get there, well, it could come right back down. XLI has been struggling as of late, starting to come back there towards 105. And like we just talked about, the throwback look, right? We just talked about this, guys, in the chat. Chip Green was talking about it also for kind of natural gas. So you see how this XLI made a huge breakout, huge pullback, and now starting to break out again. Now we can kind of keep an eye on it to see if we can keep moving. We'll see what happens. GE coming right back towards the 113s. Boeing not having a bad day, finally getting the bounce. This thing was super oversold. Now starting to work its way back. We'll see if it can make its way back through the 200. INTC, I'll take a look at that. Let's go to Intel. All right, guys, it's 402, so I'm going to end off this name right here on Intel. Looks like we're pushing towards 37. Can we go to the next level? I've talked about this. I wanted a piece of Intel as it came down. I actually even got 35s and ended up stopping out somewhere near this 34s. And look at it now, guys. It's continuing higher and could make a move. This is the type of move that I don't want to miss. Intel looks actually pretty good. And I've been a bear plenty of times on Intel. It does not look bad at all right now. The only question is it's a little bit ways from where I would have bought it, near that 35 and 34. So how do I go after it now? I can maybe rent it on day trades, but I can't swing trade at 37 because I could easily just get a nice little pullback to 36 and 35. And then I'm stopped out in the in-between stage. So this is where I want to be buying if I'm a bull on pullbacks, right? And not buying on the rips to the upside. That's how I usually get caught on the highs. And then the stock just gaps down and I get wrecked. We'll see what happens on these. Definitely battle out there, team. It's not an easy market by any means. Datadog coming right back down. Zscaler has been one of the kind of big moves as of late in cybersecurity. So if you're looking for one that's actually starting to work its way back, this one doesn't look too bad. Zscaler, CrowdStrike is another one that you can look at. That's doing really well. PanW is doing really well, especially compared to a Datadog. I know that might be sounding like it's the better option, but the truth is there's way better options here. Even Snow looks a little bit better option there than even Datadog. We'll see what happens. Datadog, whatever you want to call it. Snow, can it get back there to 180? It's kind of in reach. It's going to continue to watch some names like even Cyber. You guys can keep an eye out on that to see if it goes to the next levels. 170 seems like it's in play. This one moves a little bit too much for me up and down. So I'd rather stick to kind of the names that are starting to break out on the trends and looking for pullbacks, right? So like this Zscaler, can I get a pullback here towards kind of like 170 below, towards 170, 169 or 168, somewhere in there? I don't mind it. We'll see what happens there on Zscaler. All right, that's going to do it for us. Like always, guys, smash the like. This is Start Swing Trade, where we talk about the rotations in the market. And, of course, talk about my swing trading action. Just to kind of give you guys some insights, I've actually been taking a step back in my swing trading action. And why? Because the green is that good for this year, and I don't want to continue to battle the market, especially when we're in this uncertainty time. So I'm going to be looking to see some plays and getting some money to work. But that should come somewhere near the line of towards the end of October. We'll see what happens with that. You guys smash the like. I will see you guys bright and early on Pre-Market Prep, where, of course, it's our flagship show, and we get you guys ready for the market every single day. Hit the like button if you guys enjoyed today's show. And like always, catch me tomorrow right here on Start Swing Trade.